Yeah, so how's it going? In this video I'm going to show you how to execute trade like a hedge fund manager. For those of you that are independent forex traders and you're looking to transition into hedge fund manager, you're looking to manage investment portfolio for clients, you're looking to manage funds for investors, this video is for you. You have to listen to this video to the very end and watch how I was able to execute the CADJPY trade. Basically, CADJPY was able to make us about 11% return on investment. It's significant. 11% return on investment in less than 1 month. Most of the global hedge fund, the standard practice is that they do from anything from 25% to about 30-40% in a year, but we're able to extract about 11% return on investment in just a period of less than 1 month, right? So by the way, my name is Edwin Sambo. I'm a forex hedge fund manager. I manage investment portfolio for investors, so I'm also going to be showing you how you can also do that for investors as well. So this is CADJPY. This was a trade I took 2 weeks back, and let's just do a review of this trade, and I'll tell you my reason for taking this trade and how you can also go about taking trades like this without necessarily stressing yourself so much, because people think that when it comes to managing funds you need to be doing a lot. No, as a matter of fact, I tell people that if you are an independent forex trader and you transition into a hedge fund manager, 80% of your time should be looking to build relationship, growing your network. In fact, sourcing for investors. Spend 80% of your time to source for investors and just 20% of your time to trade. And when you want to trade, when you spend 20% of your time to trade, that would mean that you have to transition from, probably if you're a day trader or a scalper, into more of a long-term trading approach like swing trading and position trading, because at the end of the day you don't want to sit on your screen. Imagine having $12 million in assets under management. You want to be throwing $12 million around on random trades. No, that's not what you want to do. At the end of the day, you're a fund manager, you're managing funds for investors. You want to find high probability trade setups where you can expose a very minimal size of your portfolio or the investor's portfolio into that opportunity to extract so much of it. So enough with the talking, let's go to CADJPY and see why we took this trade 2 weeks back. So I do start my analysis from higher time frame, like 12 months time frame. Basically, I go to the 12 months time frame for direction. I go there for clarity to see where the market is coming from and where the market is heading to. As a matter of fact, market moves in supply and demand, right? The market, as we can see, market is coming from supply area. This other block, you can see this whole other block is coming from this level, supply. So where else is it heading to? Demand area, of course, and this is the demand area that we've highlighted on this other block. So this other block is telling us that the market is heading to this level, right? This is the demand area. So market move from supply to demand and from demand to supply. So basically the expectation and clarity, now it's bearish now, right? From this point to this point. So we've gained clarity now on the 12 months time frame. What we do when we scale down to a lower time frame is to find trades that are in line with this direction. So what we do is we go to a more smaller time frame, 12 months and 1 month time frame. And as a matter of fact, let's go back to that 12 months time frame. Let me say something. Now, each candlestick you see on this 12 months time frame takes 1 year to form. This is a 12 month time frame. So 12 months means, of course, 1 year. So each of the candlesticks that you see here takes about 1 year to form, and before the market will likely move from this place to this point, from this point to this point, the supply to demand, it's going to take probably 5 years to 10 years, and you don't want to stay on it on the trade and hold for 5 years to 10 years. Nobody does that, right? You just go on the higher time frame to get clarity, to get the direction, order flow, right? Once you get that direction, you go now to the smaller time frame. Now, because the market is telling us, because the higher time frame is telling us that the market is coming down, we are not going to expect one straight direction, like one straight movement like this from this point to this point. No, it's not going to happen. If the market had always moved this way, then we would all be there'll be so much multi-millionaires in the FX derivatives market, but then that's not how the market works. So before the market drops into this level, it's gonna make something like oscillation, right? It moves in waves, right? Something like this: pull back, the main direction, pull back, main direction, and all of that stuff. So you don't want to buy, you don't want to sell at this point. You don't want to sell. Let me zoom this in. You don't want to sell when the market is about to pull back, right? You're only going to sell at the point of supply where the market is about to drop, right? So in order for you to align yourself properly, you want to spot out areas where there could be potential pullbacks, and those areas are areas of opposition, which is demand area in this case, or in this analysis. And what we spot here is the order block that we have here on the monthly time frame. So this order block serves as a point of opposition to the overall direction, meaning the market may likely dip into this level and experience a short-term pullback, right? And you have to highlight all these areas out so that you have clarity, so that you have it at the back of your mind what the market may likely do, right? So the next area of opposition that we see, or demand that we see, is this order block too. So what this means is that the market may likely dip into this level, experience some pullback before it drops again, gets into this level, experience a pullback, then it drops again into the overall target. So now that we've had, let me take this off. Now that we've had clarity that the market should likely drop into this area, right, we are now going to go to the weekly time frame to find areas where we would likely sell from, right? And those areas are areas of supply. Remember, the overall direction is bearish, right? And we are looking to sell in line with that direction. And what we see is this order block, right? This order block serves as a supply area where we should look to sell CADJPY. So basically, we highlight this level out, right? So what this means that once the market gets here, we short. Now at the point where at the time when I took this trade, rather, the market was trading around this level. This candlestick, it was around this level, all right? And of course, I also do trade pullbacks. Let me say this out. I also do trade pullbacks. However, when I'm trading pullbacks, I'm very careful not to expose so much of my investors' portfolio to pullbacks. So I'm very calculative. I'm also very careful when I'm trading pullback, because at the end of the day, pullbacks are not the main direction. Pullbacks are just correction in prices. So if you are looking to trade pullbacks, please be very careful to trade pullbacks. So I'm going to show you this. Like, this trade was a pullback trade, all right? This trade was a pullback trade, and I'm going to show you how I was able to, trade this pullback, and of course make about 11% returns on investment on just this trade. So at the time when I took this pullback trade, the market was trading around this level. So I went to the 4 hours time frame. I don't do anything below the 4 hours time frame. I stop my analysis on the 4 hours time frame, meaning my execution is always on the 4 hours time frame or on the daily time frame. So on the 4 hours time frame, I waited to see an interest to the upside. And what is that interest to the upside? Of course, a break of structure to the upside, and I saw that somewhere around here. It was a break of structure here. So this break of structure told me that, or gave me a sign that the market is interested in, going up, of course, which is a correction, which is a pullback, right? And remember, it's a pullback trade. So what I did was, after seeing the break of structure, which is an interest to the upside, I had to buy from an area of demand, which is this order block, the main threshold of this order block, that's equilibrium, like the middle part of the order block. I went long on this asset from this point. My SL went below this low. I think I risked about 80 pips on this trade, if I'm not mistaken. Yeah, it was at 80 pips, right? And my target was at this weekly supply level, which is that order block on the weekly time frame. This was a 1 to 4 risk to reward ratio. I risked 2% on this trade, and I was able to make 8% back on this trade, right? 2% and 8% back. And that was the first entry point. I had the second entry point. The second entry point was, I saw it pull back to this other block, and I also went long from that level. My SL went below this level. It was a 50 pips SL. trade, and my TP of course is the overall TP level, the overall take profit level, which is that weekly order block, which is a supply level, right? So it was a 1 to 3 risk to reward trade. I risked 2%, and of course I was able to make 6% on this trade. So 6% plus 8%, that is about that's about 14%. Now there's something I need to point out, because I'll tell you why it was 11% that I made on this trade. I have a risk, I have a trade management protocol around my execution, and one of the rules on that trade management protocol is that anytime the market goes halfway my target, I take 50% partial profit or 50% of my position off. Meaning if I went long on this level with 10 standard lot size, right? 10 standard lot size, and the market gets halfway this target, which is around this level, I'm going to take out 5 standard lot size, and the remaining 5 standard lot size, I'm going to make it run on a risk free, meaning break even. My sell will now go above this level, meaning somewhere, if my initial entry point was here, at the point where I take 50% partial profit off, my sell will now be extended to this level, meaning the trade will now be running on a risk free. Do you understand? The trade will be running on a risk free. So whatever happens, the market decides to come back into that level, I'm not losing anything to the market. I've already taken 50% partial profit off, and the second the running position is not or exposed to any market risk. So that is basically how I manage my trade. So after taking 50% partial profit off, cumulatively I was able to close or to make about 11% return on investment on CADJPY. And I need to say something. Like I said earlier when I started this video, if you need to look to trade, I didn't spend so much of my time on this charts, right? I didn't sit on my screen to want to pick every price movement. No, as a matter of fact, my entry pattern is usually using pending orders. So in this case, the buy limit order. What I just do is to place my buy limit order at this level. My sell will now go below this level, and my TP will now get there. So I just do that, and I'm off. Most times I'm doing other stuff when I get a notification that my orders have triggered, or it's after it's during the end of the day, before bedtime, that I check my charts to see that okay, the market has indeed gone my direction. What I just do is to manage my trade, break even. Where I need to take partial profit, I take partial profit. That's how I trade. When you begin to sit and watch your screen every now and then, you know, there's this addiction that comes with, you just want to be busy, right? And you want to get busy on the charts. So when you sit on your charts, when you sit on your screen trying to be busy, you end up exposing your investors' portfolio to so much risks in the marketplace, and that's not what you want to do. You don't want to lose those investors, and you don't want to, you know, start running because investors are after your life. Nah, that's not what you want to do. As a matter of fact, in the subsequent videos or in my future videos, I'm going to tell you, this is not the only thing I'm going to be talking about. I'm not just going to be doing charts work with you. I'm going to show you how to structure your fund, your hedge fund. I'm going to show you how to draft out your investors mandate, and of course how to go about sourcing for investors to invest in your trading. So that was for CADJPY. We're able to make 11% return on investment. Let's go to USDJPY, because I also had another trade on USDJPY. On USDJPY, I had a buy trade somewhere around here. Now if you look closely at this point, there was an entry point somewhere around here. Now the reason why I didn't buy USDJPY at the time when the market was around this level was because I was exposed to risks already on CADJPY, right? I don't stack orders. That's what you need to understand. I don't stack my trades. Before I enter a new trade, I must make sure that the existing trade is either running on a risk free, all right, or I've taken partial profit, break even, and all of that stuff before I take on new trades, right? So I don't stack orders. I don't take new trades when I already have existing trade open to market risks. Now I don't do that. So that was why I avoided USDJPY at the time when the market was at this point. But then when the market came into this point, of course, the protocol, my risk management protocol, allowed me to hop on this trade. Now I was able to make 4%. I was sorry 6%, because it was a 1 to 4 risk to reward ratio. I risked 2% and I was able to make 8% returns on investment. So if you add this 8% plus the 11% on CADJPY, probably about 19-20% returns on investment, and it was in less than 1 month, right? So that is how I was able to make 19-20% return on investment in just less than 1 month from just 2 assets, by spending just 1 hour on the charts. I do my analysis on the weekend, then during the weekdays I spend 30 minutes in the morning and 30 minutes at night. I only go there to manage the trade and see how I can take partial profit where I need to take partial profit, and break even where I need to break even. Like I said earlier, in my subsequent videos or in my future videos, I'm going to be showing you how to source for investors to invest on your trading, how to draft out your investors mandate, how to draft out your pitch deck, how to go about meeting investors, and seeing how you can secure funds into your fund, right? And that's why you need to subscribe to this YouTube channel, and you need to hit the like button, share this video, because at the end of the day, what really motivates me to do what I'm doing now is when I get the video pushed out to a lot of audience, right? So you want to hit the subscribe button, you want to share this video, you want to comment on this video, so that at least it can get to a wider audience. Because if you're looking to become a hedge fund manager in your career and your trading career later in future, then this YouTube channel is the best place for you to get started. So I'll be putting out some insightful videos later in the future, and you can only help me to help us by subscribing to this YouTube channel. I'll talk to you some other time. Take it easy, and I'll speak to you.